For over a year, I disappeared from YouTube. I wasn't posting videos, I wasn't sharing trades, but one thing I never stopped doing was studying the charts. During that time, I realized something. I wasn't losing because I didn't know enough indicators. I wasn't losing because I needed another strategy. No, I was losing because I didn't truly understand market structure. Once I understood how price actually moves, everything started to make more sense to me. Hey there, my name is Crystal. In this video, I'm going to show you what market structure is, why it's so important, and how learning it completely changed the way I trade. This video is going to have three parts, and on this first part, I'm going to explain to you my biggest mistakes I made. Looking back on my old trades, I can honestly say I was focused on the wrong things. I spent hours searching for the perfect indicator. I watched strategy after strategy, you name it. But every week I thought I found the secret. But no matter what I tried, guys, I kept asking the same question. Why did price go the opposite direction than I anticipated? At the buyers at everything, but you find the price goes the other way. So the answer wasn't hidden in other indicators. It was already on the chart. I just didn't know how to read it. Price always leaves clues. Like every high, every low, every break, every pullback, they all tell a story. And that's what market structure is. And that's what I'm going to teach you in this video. So what is market structure? At its core, market structure is simply where price moves. Markets don't move in a straight line, guys. They create highs and they create lows. And those highs and lows tell us who is currently in control. Is it the buyers or is it the sellers? Instead of guessing where price might go, I started following what the chart was already telling me. So I'm going to show you guys what market structure is by simple chart drawing. So on the left, I have a bullish structure, sorry, and on the right I have a bearish structure. So for a bullish structure, you can see that market is making higher highs, higher lows, higher highs, higher lows, to eventually the market changes to bearish. Remember, the market cannot always stay up, it changes direction. Okay, so the market creates a higher high, and that higher high creates a lower high, which then breaks that high to make another higher high. That higher high makes another lower high, which then breaks that previous higher high. You have seen how market structure goes. Then, just like always, market doesn't always stay bullish. That high or that lower high can be broken, indicating that price wants to shift lower. So this is what happens. The price breaks that low and creates another lower high to continue going to the downside. Okay, so on the bearish side of things, you can see that market was trending to the downside. It was breaking structure to the downside, breaking structure to the downside until it shifted bullish. Why did it shift? Because this high was broken. So how do you know that when this high is broken, the market is going to shift direction? Let me begin with a bullish example. So when we break this high, this previous high, which made this low, it means that this area and this area are our range. This is the range of when we need to take a trade. We don't want to see market go below this when this low. If the market goes below this low, it means that our structure shifted from bullish to bearish. So this low is protected. No matter what, this low must be protected. If it doesn't hold, it means that structure shifted. So this law becomes protected. Same thing here, this law becomes protected. Once this law gets purged, it means that we have shifted in structure from bearish to now bullish. You have seen that. So same thing here. This is a protected lower high. This is a protected lower high. This is a protected lower high. And this is not this is the one which we need to break, the higher high which we need to break in order to continue to the upside. So protected lower high, protected lower high. We are breaking structure to the downside until we break that low protected the lower high. We then switch bullish, and this becomes our protected lower high, so on and so on. So this is how market structure looks like with simple drawings. So guys, what changed once I understood what market structure was? What changed in my trading, the way I trade? liquidity made more sense. Fair value gaps made sense. I understood that liquidity is most important. I understood that market chases liquidity, and that once the market is overbought, it needs to sell. Once the market is oversold, it needs to buy. Okay, and I understood premium and discount. Instead of looking for random entries, I started waiting for the market to show its intention to continue in the certain direction I anticipated to go in. Okay, so I stopped asking where should I enter this trade, and I started asking what is the market trying to tell me? Is it respecting this fair value gap? Is it respecting this liquidity that's taken, or is just a break of structure to continue the move down or up? Let's look at this chart, guys. Let's look at this chart. Now, this is AUD USD. I'm on the 4 hour time frame. You can use the daily, weekly, 15, 1 hour, whichever you want to use. Price is flat. Whatever happens in the daily happens in the 4 hour, happens in the 1 minute, happens in the 15 minutes. But just know that higher time frames hold higher power over small time frames. Okay, so let's look at this chart. Do you notice how price creates a series of lower highs? Okay, like this high is lower than this one. This high is lower than this one. Okay, this means that the sellers are in control, guys. Yes, this shows that sellers are in control. I won't talk much about what's going on here. Maybe in the next video. This was a sort of introduction for me coming back into my channel, introduction into market structure and my content. But as we go on, I'll show you what you can come up with, how you can go about your structure. But I'm sure that you now have an idea of how we mark this. Okay, it's here. We broke structure to the downside. The market can trade within this high and this low. As long as it's within this range, price still bullish. As long as it's still bearish, sorry. As long as we haven't taken this high, we are still bearish. Okay. When we take that low, doesn't mean that we have taken liquidity, just a continuation. When we close with a strong candle, I mean a full body candle, it indicates that we are still going lower, and price will just come within the range of the high and the low which was created. It might be a 50% discount, 71% discount, then continue lower. From here, it will create another low, then come back into the range, create a lower high, and continue going to the downwards, because what? The sellers are in control. So some people might panic here saying, no, maybe the structure shifted from here, we have taken this high, we are now up to we now want to go up. No, guys, we are still in the range. We are still within this range, the high and the low. We are still looking for sales. Not until this structure is high, the high is broken, do we change structure to the upside. Okay. So once price respect our structures, see, and continues higher or low, that's how we trade, guys. That's how we trade. So that's where high probability opportunity comes from, guys. Here, retraces. That's where high probability trades come from, and as well as the reversal, the move to make a retrace. These moves, that's where we get trades. Okay, so that was just a rough introduction. I don't know if that made sense. I'm not good of a teacher, but I'm trying to be. But that's market structure for you guys. That's market structure. So it's the same thing when we are bullish, guys. You can see price broke this high and coming down in, continued going up, broke this new high, went up, made the new high, came back in, made the low, broke that high, previous higher high. We are coming back in the range, maybe into this fair value gap, then we can continue up and break this high. So it's the same thing, guys. It happens every day. You can see it. break the structure, come back in the zone, continue up, break the structure, make a new one, new high, come back in the zone, go up, break the structure, come back in the zone. Now, maybe when we reach in this fair value gap or imbalance, we are going to continue up. So that's what structure is, guys. That's why I said that you need to understand structure so that you'll be able to know that I'm bearish or I'm bullish. This week I can be bearish, next week I can be bullish. It changes, market changes, doesn't stay bullish always, doesn't stay bearish always. The market always changes the direction. Okay, so yes, guys, we have seen how market structure is to your trading strategy. Doesn't matter what strategy you use, it's not that your strategy is not profitable, it's just that you don't understand the way the market moves. So once you learn this, you are good to go. Your strategy will start to show you the results you want to see. Okay, so this is just the beginning. Over the next few videos, I'll be sharing everything I've learned about market structure, liquidity, fair value gaps, premium on discounts, and how I combine them to form one approach. I also have a 5K challenge of which I'm trading on GFT, God Funded Trader, and I hope to share my progress on the next videos to come. If you are on your own trading journey, let's subscribe and let's learn together. Thanks for watching. I'll see you the next video. Peace out.